You are watching Daily Market Pulse. Today is Sunday, April 19th, 2026. If you want a clean daily read on macro and market risk, subscribe for the next briefing. The human cost of Celsius collapse is reshaping crypto markets as investors flee centralized lending for self-custody solutions. Here's the framework for today's briefing. Celsius collapse, human cost, personal tragedy linking platform failure to family loss, CeFi counterparty risk reality, why centralized lending platforms remain systemically dangerous, self-custody revolution, market rotation toward trustless storage solutions, Bitcoin safe haven thesis, how BTC benefits from CeFi trust breakdown, regulatory crackdown coming, what to watch for increased oversight signals, daily financial market update, live prices, gold, silver, crypto, equities, US bonds, and trend. Let's start with a story that crystallizes the human cost of centralized finance failure. Natalie Brunel, a major Celsius creditor, shared her story of losing everything on Celsius the same day her father died, creating traumatic psychological links between the platform collapse and personal tragedy. This represents the severe human cost of CeFi counterparty risk that goes beyond financial loss to include psychological trauma, suicide, and family devastation among 650,000 victims. The emotional testimony reinforces the flight from centralized crypto lending towards self-custody solutions as trust in intermediaries crumbles. What to watch next? Monitor testimonials and victim impact stories that could influence regulatory action and public sentiment toward remaining CeFi platforms. This personal tragedy exposes the fundamental flaw in centralized crypto lending. The Celsius collapse demonstrated how centralized crypto lending platforms create systemic counterparty risk through opaque leverage and poor risk management practices. Unlike traditional banks with deposit insurance, CeFi platforms offer no protection when they fail, making them inherently more dangerous for retail investors. Investors are rotating away from high-yield CeFi products toward lower-risk self-custody solutions despite yield sacrifice. What to watch next? Track withdrawal flows from remaining centralized lending platforms and any signs of stress in their operations or token prices. The Celsius trauma is accelerating a fundamental shift in how people hold crypto. Crypto investors are rapidly moving towards self-custody solutions and non-custodial storage as direct response to centralized platform failures. This represents a structural shift in crypto market infrastructure away from centralized intermediaries toward trustless, decentralized alternatives. Hardware wallet manufacturers and DeFi protocols are seeing increased demand, while centralized lending platforms face continued outflows. What to watch next? Monitor on-chain metrics showing outflows from centralized exchanges and growth in DeFi total value locked. This self-custody revolution particularly benefits Bitcoin as the ultimate trustless asset. Bitcoin is emerging as the primary beneficiary of the flight from centralized crypto lending as investors seek the simplest trustless asset. Bitcoin requires no smart contracts, no platform trust, and no complex DeFi protocols, just private key control, making it ideal for traumatized investors. Medium-term outlook favors Bitcoin accumulation as investors prioritize security over yield in their crypto allocations. What to watch next? Track Bitcoin's performance relative to altcoins and any increase in long-term holding patterns on-chain. Meanwhile, regulators are taking notice of these systemic CeFi failures. Regulatory scrutiny on centralized crypto lending platforms is intensifying following the Celsius collapse and other CeFi failures. Regulators are recognizing that CeFi platforms operate with bank-like functions, but without bank-like consumer protections or oversight. Remaining CeFi platforms face increasing compliance costs and operational restrictions that could make their business models unviable. What to watch next? Monitor regulatory announcements regarding Celsius or similar entities and any proposed rules for crypto lending platforms. Now let us turn to today's live market snapshot, where gold, crypto, stocks, and bonds are actually trading right now. Now for our daily financial market update. Here is where the key asset classes stand as of Sunday, April 19th, 2026. Gold is trading at $4,879.60, higher on the day, and is higher over the past 5 sessions. Silver is at $81.84, strongly higher today, with a 5-day trend of plus 3.1%. In crypto, Bitcoin is at $75,680, higher on the session and higher over the past week. Ethereum is at 2,332 TOG, lower today. Other major crypto, Solana at 80.55, BNB at 622.19, XRP at 1433. On equities, the S&P 500 at 726.06, strongly higher. The Nasdaq at 24 from 468.48, strongly higher. The Dow at 49.47.43, strongly higher. Internationally, the DAX at 24th and 22.24, strongly higher. The Nikkei at 58,475 and 9, strongly higher. The FTSE at 10,667.663, slightly higher. On the bond side, the 10-year U.S. Treasury yield is at 4.25%, lower on the session, and the 30-year yield is at 4.88%, slightly lower. Yields remain in focus as the market watches for Federal Reserve signals. Rounding out the macro picture, WTI crude at $82.59 per barrel, sharply lower. The dollar index at 98.23, slightly higher. The overall tone is risk-on. Equities and crypto are both bid, suggesting investors are positioned for continued upside in the near term. So what's the takeaway from today's briefing? The human trauma from Celsius isn't just a tragic story, it's a market catalyst. We're seeing a structural shift away from centralized crypto lending towards self-custody solutions. Bitcoin benefits as the ultimate trustless asset, while regulatory pressure builds on remaining CeFi platforms. This isn't just about one platform's failure, it's about trust reconstruction in digital finance. The victims' stories are driving real behavioral change, and that behavioral change is creating new market dynamics we need to track closely. Thank you for your attention, and we will see you again tomorrow.